All right, very cool. Well, here we go. Let's jump in. I'm super excited today. We're going to talk about the evolution of real estate investing, which if you signed up for this webinar, you probably know that is real estate tokenization, digital ownership of real estate. So we're going to do a presentation version of our quick start guide to real estate tokenization today by yours truly. I'm Tyler Vinson, and I'm the CEO of REtokens USA. So here we go. I think here we go. There we go. Of course, we have to start with a disclosure disclaimer. All the material covered here today is for educational purposes only. None of the material should be considered legal, tax, or investment advice. This is not a solicitation for an investment, offering, or broker-dealer engagement. All right, folks, let's get back to where we were, which was the disclaimer. As mentioned, this is presented by REtokens USA Inc. And REtokens USA Inc. is a real estate tokenization and capital management platform and is not a broker-dealer. Securities offers are only made from REtokens Capital LLC, which is a FINRA member, SEC registered broker-dealer, and ATS. Tyler Vinson, which is me, holds a Series 7 securities license as well as a designated real estate broker license in Washington State. So I'll get that house cleaning out of the way, and let's dive in here. The agenda today, we're going to talk about the evolution of real estate investing, a quick start guide to real estate tokenization. Really want to lay the groundwork for you guys and touch on the fundamentals. But for those of you that are more familiar or becoming experts, I think we're all becoming experts in the real estate tokenization space. We will talk about some higher or some deeper dive stuff, and then you'll be able to ask questions at the end. So we're going to talk about challenges with traditional real estate investing, key benefits of tokenization. We're going to talk about how it works, tokenization strategies, and the secondary marketplace, as well as the players involved in tokenization or your tokenization team. Let's dive first into the challenges with traditional real estate investing. So those of you that are professional real estate investors, maybe you're syndicators, or if you're an investor that has invested in real estate syndications or holds a portfolio, you know that traditional real estate is locked up. It's an illiquid asset. In fact, the way we typically have to deal with that real estate is hold it forever, sell the whole thing, or do cash out refinances. And each of those can be extremely beneficial in their own right and strategy, but they can also be very limiting as well. And so we'll dive into that. The four main challenges with traditional real estate investing is limited investor exposure when you're doing investment deals. And so what we see out there a lot is limited access to fresh capital. You know, in raising these deals, unless you're a large institution, you're very much, you know, on your own with your own network and your own resources. We just talked about this one. Real estate is illiquid. So the equity is trapped, and that trapped equity can sit idle for years, not doing anything. Complex compliance barriers. This is really a big one. And if you look at, you know, a global scale, it really excludes 99% of potential investors that may be able to invest in your deal. And you know, this one's a big one for me. Those of you that have heard me on podcasts over the last several months often hear me talk about a good friend of mine that I talked with after a soccer game, and how her and her husband had saved up and wanted to get involved, you know, in real estate projects that I was doing, but due to complex compliance barriers, like, you know, being accredited at the time, I was only accepting accredited investors. It excluded somebody out of the deal that I really wanted to have in the deal, and they really wanted to be in the deal. But the traditional setups just don't make it real reasonable to be able to do that. So that needed to change. Manual processes and investor management. I like to think of this as going from analog to digital. And when you do the manual processes or your own analog, it costs time, effort, and money, right? That can potentially slow down capital raises. There's potentially missed opportunities, and investors can be frustrated. Having more flexibility in the deal, like other investment classes, is long overdue. So, solution, we believe, obviously, that tokenization is the future. And it's not just us. Just ask Larry Fink, the CEO of BlackRock, the largest asset manager on planet Earth, who's been quoted several times saying in the future, all financial assets will be tokenized. And, the CEO of Robinhood has the same sentiment. And we just believe that real estate is that as asset class and that asset type that needs it really probably more than any of these other asset types. And I'm a little bit biased. I'm a real estate investor. I have been for well over 2 decades. And so I may be biased with that, but the reality of it is real estate hasn't had the ability to trade electronically, to really trade same day, to have these fractional components that can allow more people to get involved with these investment deals. So tokenization is transforming that traditional ownership model into digital tokens that have the potential to be bought, sold, and traded. Real estate tokenization is the evolutionary advancement that brings modern efficiency to traditional real estate investment, and that paves the way to the same type of advantages that have revolutionized other financial markets. Let me give you an example. The stock market used to trade with papers on the floor and elbows flying and shoving things up tubes. I mean, just a crazy world on the floor of the New York Stock Exchange, and how far they have come with the ability to settle electronically originally. And then, of course, Wall Street, Larry Fink and BlackRock just mentioned, is one of the biggest proponents now in the digital asset world. So the way I like to think about tokenization, guys, is imagine your real estate project, be that a single apartment building or portfolio, as a large gold brick, right? And when we have a large gold brick, it's valuable, it's a great asset, but it's really hard to get in and out of the ownership of a large gold brick, right? The other thing is whoever's making the decisions for the large gold brick, whether that would be to sell the large gold brick and cash everybody out, whether that's to hold it for 10 or 15 years and never cash anybody out in that time frame, or to go put new debt on it. Everybody who's involved in the large gold brick has to do the same thing, right? But now with tokenization, imagine taking that really large gold brick and breaking it into 10 million gold coins. You still have the overall same value, same properties, same value proposition, all of that. But now each investor can hold these gold coins themselves, and they can choose to sell, or they can choose, hopefully in the future here, to gain leverage on those, or they could choose to buy more. It just adds that flexibility, right? That really hasn't existed for asset types like real estate. So that's how I like to think about tokenization and what it means. I'll just take a minute to caution everybody to not get too hung up in the tech part of it. A lot of times people really want to deep dive into blockchain. And if you want to do that, we'll have a Q&A at the end where we can do that. Or they think that it fundamentally changes the investment by having this digital ownership component. And that's just not the case. Underneath it is still the same fundamental real estate that us real estate investors know and love, that's built wealth for generations, right? It's still fundamentally the same real estate, but now we're putting a digital wrapper on it, giving it this digital ownership component so it can play ball in the new digital era. So it can benefit off some of these things that new technology and blockchain and the future of capital markets has to offer. And that's what's really, really exciting. All right. So we just talked about this. What exactly is real estate tokenization? Let's break it down in some bullet points for you. And we're converting that traditional ownership rights into digital tokens and minting them on the blockchain. The traditional ownership rights still exist, right? People worry about, oh, what if somebody, got my security tokens, got my real estate tokens? Or a question I get asked is, what happens if your platform shuts down or doesn't work? Everybody loses their investment. That's not true at all. Fundamentally, the same ownership still exists no matter what. In fact, if you sell the property, you would just burn all of those tokens out there. People will get paid out pro rata, but it functions just like any normal real estate deal would. So it's not fundamentally changing it as much as it's enhancing what you're already doing. It's giving the real estate that you love additional amenities, additional flexibilities, additional features into your real estate, which is so, so cool. And we'll talk about some of that. Key components: digital ownership, same rights and benefits, immutable records, which is blockchain, instant verification. Again, you can reference the blockchain for that. And what that all equals is enhanced security. So this means the same returns, the same structure, but now with unprecedented flexibility with that ownership. So let's dive into the benefits of tokenization. Unlocking a pathway to liquidity. This is something that you hear in the industry all the time. And I actually, frankly, think the industry has been over-promising it because there hasn't been robust secondary marketplaces to trade. There's not things like market makers quite yet. These are all things that our conversations are having, things that are coming into it. But by no means should the industry be over promising this huge instant liquidity today, this minute. However, that's exactly what we are a proponent of, and what we've been building is the pathway to the secondary marketplace. And we're going to talk a lot about that later in this webinar. But by unlocking the ability to buy, sell, and trade these fractional ownerships, you now have the ecosystem and the environment for this marketplace to mature like the others. But my point of that was all to simply say you still need a seller and a buyer at the end of the day to be able to transact, supply and demand. And that's what will dictate what that liquidity actually looks like, right? Access to broader range of investors, and then streamlining the capital raising process. So those are three areas that we'll talk more about as we move along here. So what does that mean to unlock a pathway to liquidity? Well, the traditional way is investors' money is completely locked up for years. If you've done a syndication either as a syndicator or as what we call a LP, a limited partner, an investor into these syndications, you know that your money is locked up in there until the property is sold or till there's a cash out refinance. That's pretty much how it goes. And it's hard to say how long that time frame will be. In fact, syndicators feel pressured to have to sell the asset or even maybe cash out refi due to short-term real estate loans. And that can put them in a bad position. That can actually affect the investor's returns, right? If the syndicator is forced into, the operator is forced into a market environment, be it sell or refinance or anything that's unfavorable to the real estate investment, well, that could potentially be unfavorable to the investors as well. And you're just kind of along for the ride. Battling through those cash out refis is a beast. Those of us that have done it in, as mentioned, I've been in the real estate investment space for well over 2 decades, and sometimes it's really, really easy to do cash out refis, and the terms are fantastic, and sometimes it's not, and it becomes quite a effort to do that. So there's been very limited exit strategies, and it does make investors potentially think twice. Now, as an investor, you should consider all, opportunities and risks and everything going on there, right? That's important that you have access to that information. But it's really limited. Once you're in, you're in the traditional way. Um, and then there's just no access to capital without those major property decisions, right? Very, very limited ways to deal with that. But once you add that ownership component, that digital ownership component with tokenization, investors may be able to trade tokens on regulated secondary markets. In fact, that happens today. And so that is exactly how we see the future. That is exactly the relationships that we're building. That exactly is what is happening in the world today. So accessing trapped equity without affecting the property title, right? Because these are securities. You're not actually dealing with the deed. Okay. In the future, you may deal with the deed, but one of the differences with this type of setup versus being on the actual deed is if you're on the actual deed, there's a whole different set of liabilities to be concerned about compared to if you're in a limited partner security structure where your liability is typically limited to the amount of money you invested, and there's not when you're on a deed, there is a potential that you're going to be obligated for more than the investment that you made because you're on title, you're on deed, you're an owner on the deed. To where this is a tokenization is an exact representation of all of those ownership rights, cash flow, equity, K1 tax benefits, just like real estate syndications today. But part of the reason behind a vehicle like this is to limit that liability for those limited partners. General partners, we're still all on the hook. But multiple exit strategies available to investors when you add this digital component. So there may be secondary market trading in the near future. There may be loans that you can get against the real estate tokens, all sorts of different things that you can do that traditionally just weren't reasonable in the former structures. Potential risks. So, you guys can probably tell by the language that I'm using and things like that that I really have to watch what I say. I mentioned that I carry a few different professional licenses, so I need to make sure that I don't talk in an over-promissory manner and that we balance things out with risk reward. And so this is what a slide like this is about. Because the potential risks are, as with all securities and investments, the investor could lose money, right? If you raise capital and you're not disclosing that to your investors, that may not go well for you. And we talked about fundamentally this being real estate underneath and real estate investments. That's important to remember because the operational or systemic risk in traditional real estate is present for real estate that has been tokenized, right? And historically, private placements like this, like real estate syndications, have been illiquid. So just the fact of tokenizing it doesn't guarantee that the ownership tokens will be liquid. And typical market characteristics are at play. You need a seller, you need a buyer, and those two parties need to transact. The huge breakthrough here is there has not been an ecosystem to be able to facilitate this. And we'll talk more about that because the pathway to liquidity in the future is certainly something that people are thinking about when they're talking about investing in tokenized real estate. And it's certainly why a lot of issuers are moving forward and making sure that their projects are tokenized because they believe in the future of digital capital markets. All right, and the last, economic, interest rate, and market risks all remain present, right? Economics, interest rates, market risks, those affect all types of real estate. So we just want to touch on that stuff. All right, digital ownership supports global markets. So traditionally, you're restricted to your personal network and referrals, whatever promotional stuff that you're doing. There's really high entry barriers that we talked about earlier, and that excludes most investors. There's complex manual processes, kind of the analog version of what we talked about. And that's what contributes to the illiquidity. When you do these deals as a syndicator myself in the past, when I've done this, it hasn't made sense to bring an investor in at a very low entry point, like maybe $1,000 or $5,000 or $10,000, something like that, because of all of these complex manual and compliance processes that are involved. Organic referral growth, it can be slow and cumbersome. So with tokenization, real estate tokens can be traded on registered secondary markets, SEC registered secondary markets. The access to that trapped equity becomes real. And as mentioned earlier, does not need to affect the property title. Potential future ability to use tokens as collateral for loans. These are discussions I am in all the time. This is being worked on right now today. And then independent investor diversification and exit strategies. Remember the gold brick down to the gold coins? When you're the gold brick, you don't have independent investor diversification and exit strategies for that deal. You're just in the deal doing whatever the sponsor or syndicator does. But with the 10 million gold coins, now there's flexibility for that. And you as syndicators, there's all sorts of benefits to having your property be tokenized and trade that way. One of them is how many times, those of you that are experienced syndicators, have you done a deal and you're talking with previous investors in other deals, and I said, hey, I'd love to get involved with this one, but I'm in those other 2 or 3 deals that you did, and I've kind of got all my capital locked up in there. Man, it'd be nice. We've done so well on 123 Main Street. It'd be nice to harvest some of those profits and get into this deal. That would be great. But that's normally where the conversation ends. Now in a secondary marketplace situation, right? And the investor being able to act on their own, they can make different decisions. And that just might entice them a little bit more to participate in your capital raise in the first place, if they know what other features are involved with investing with somebody that has a tokenized project versus somebody that doesn't, right? All right. Streamline capital raising. So again, back to traditional way, it's time consuming. You got one-on-one investor presentations. And I'm not saying that 100% goes away, because maybe you like to do that, or maybe with large investors, you still will do that. We're just saying that there's additional ways besides that. Manual document management and funding coordination. So, even when you use capital management software, you're often using kind of different pieces to get the offering all put together, run them through compliance, get the funding coordinated, send the wire here, bring mail a cashier's check, or bring it into the office, those manual processes. And kind of what I was just describing, there's separate systems often for accreditation, KYC, funding, signing the docs, all those types of things. So ideally, you want it in one spot. Endless prospect follow-ups and manual tracking. So with the digital ownership component or tokenization, we're talking about streamlined investor verification and qualification, right? So somebody's going to invest on a deal in a platform like REtokens. They can go, they're going to create an account. It doesn't take long. And to actually move forward in the investment, they're going to have to go through KYC, which is a verification. And if we're talking about a primary offering, let's just say it's a Reg D 506C, which requires accredited investors in the primary, then there's the qualification all right there that they need to go through as well. Digital ownership for easy movement of security tokens. So now it's much easier to transfer these fractional ownership shares when they have a digital representation on a platform. Think about that. Think about moving funds. The Web2 experience that we have is, think about moving funds between, your bank accounts, or if you have a Charles Schwab account, how you potentially buy and sell securities through that. And so having the electronic and digital ownership piece is nice for that. Single platform handles all aspects of the investment process. So like I said, all in one place. AI, that is probably the hottest topic out there. when it comes to innovation. And AI is going to be a big part of the digital asset world in the future. And so we even have some incorporated into our platforms. We've got AI powered automated investor communications and updates. So let's say they have compliance questions or different things like that. So I'm just going to put a little asterisk on there. That's something that needs proper disclosure, disclaimer, and things like that. So we're not going to dive too deep into that today, but it's something that our clients are familiar with. Innovative leadership tells a story about you, right? There's so many benefits, and we're covering a lot of them today. But when we're bringing issuers on right now, at the end of the day, what they say is the most driving factor, the biggest driving factor, and why they're tokenizing, other than maybe the potential for liquidity on the secondary market, is innovative leadership in their space, because innovative leadership tells a story. They want to be that person in their space. But one of the issuers we're talking with now has a really large manufactured home operation and parks, and so they want to be known as the person in that space. So these different asset classes have opportunities to set yourself apart, and that may give you a competitive advantage over your competitors that you're raising capital against, right? And so that innovative leadership tells a story about you and who you are and the way you think, and it's a powerful one. So let's talk a little bit about how this works. How does tokenization work? Well, first and foremost, what we do at REtokens, it has to do with securities. You hear a lot of stuff about, regulation and potential regulatory uncertainty for digital assets. We view that really as more in the crypto world, because in the crypto world, most of the crypto projects or coins, if you will, cryptocurrencies, they're called, however you want to box those digital assets up, they're trying to position themselves as not being securities. That's the fight that they're fighting is, hey, we're not securities. Okay. So that's the opposite of the way we approach this. These absolutely are securities. They need to be compliant, and you need to have the proper legal paperwork and structure. So one of the first things we do, after visiting and making sure our potential customers are thinking about this the right way, is we've got to get them with a digital securities attorney. We've got several that we've developed awesome relationships with. Sometimes they have their own attorneys, but bottom line is this takes an attorney to put together a securities package so that that asset has the ability to participate in this digital world. And so what we do is we use that securities package and how we move forward. So compliance documentation in that package, you're going to have private placement memorandums, op agreements, subscription agreements. Depending on what that attorney does, there may be a few more involved there. And then, of course, they've got filings like Form D and stuff that they do with the SEC. Ensuring SEC exemptions are properly addressed. So I'm just going to touch on securities real briefly here. And when it comes to securities in general, I'm going to overgeneralize. You've got two types. You've got the type that needs to be registered with the SEC, and that's what IPOs are and public companies. They're registered with the SEC as a security, or you need to have an exemption for securities. There are exempt securities like municipals, municipal bonds, things like that. That's not really what I'm talking about here today. So what we do when we're talking about private placements or these real estate syndications is we're saying, yes, these are a security and we need an exemption to sell these securities, an exemption from a full registration. And so we talk about Reg D and Reg A and Reg CF, and we'll touch on those more as we go along. And then really we want to plan the tokenomics for primary and secondary market trading. I think that most of us are used to the primary market for capital raising. And you may see deals that have waterfalls in them and a whole bunch of creative structure. In fact, kind of an inside joke is that for the last 10 or 12 years, flexing on how much or how many waterfalls and how comprehensive or realistically complicated your deal is, was a cool thing. But if you think about that from a secondary market trading perspective, maybe not so much, right? Imagine if somebody goes and you have, Cash Flow Assets USA as your a brand, let's just say, and they go and you have a property, let's call it 123 Main Street, and then you have like 5 different investment offerings, tokens, if you will, under that same property. It'd be pretty confusing. Like, okay, it would take a lot of time and effort to go in there and look at that. But if we start thinking about secondary market trading, we start thinking about velocity of trading and simplicity in trading in your brand. If you go to another one and it's got maybe a GP token and an LP token and that's it, well, that becomes pretty clear and easy compared to 5 different options there. And so those are things that we want to talk about up front. Those are things that you want to talk about with your attorney. And those are strategies from a tokenomics standpoint that should be addressed so you can build this properly, because we really believe that at the end of the day, there's huge benefit in having a brand that can trade on a global secondary marketplace. We believe that the velocity of that brand, the tradability, can really help scale your business on all fronts, primary included. Okay, tokenization process step 2. We're going to create those digital tokens, or what we call minting the real estate tokens. And this just gives your ownership a digital feature. We're going to take that real estate that you own, that real estate ownership structure, and we're going to give it this digital feature, this digital component, which of course we call a token. One thing that's really cool about digital ownership or tokens is features, utilities, including compliance, can actually be programmed into these real estate tokens, into the ownership. Let me just give you an example. If you did a Reg D 506C, which is an accredited investor only primary raise, you can't sell that in the primary to non-accredited investors. But just as there's an exemption to selling equity on a primary, there's exemption to resale those securities on a ATS, or a secondary marketplace, right? And one of those rules of what we call Rule 144, to sell to non-accredited investors on the secondary marketplace that qualify, they got to go through KYC and whatnot, but is a 12-month holding period of those securities. So as an example, the 12-month compliance piece can be programmed into the token itself, preventing somebody from being able to sell that and ruin your safe harbor exemption, right? So that's a very, very cool feature of the digital ownership, is that things can be programmed into the token, and it just doesn't have to be compliance. We've got a client we're working with right now that is programming different utilities into the ownership based on what level their investors come in at, because they have a hospitality type development project that they're doing. So just kind of a sneak peek at what actually can be programmed into the tokens. Very different from traditional, in my opinion. Technical implementation handled by experts, and then your real estate investments enjoy the new digital era and really the new features involved with being able to have the digital ownership component. Step 3, raise capital or trade equity. So you can launch your offering on a primary or secondary marketplace digitally, right? We're going to put it into the marketplace. It's all built out. Everything from your promotional material to your documents, all of these are put into the marketplace, and you can launch. Investors complete verification and invest entirely online. So when they go view your project, you know, if you're in the marketplace, or let's say you're doing your own promotion and you have your unique URL, your unique, you know, data room landing page, it's got it all right there. Investors that come visit that can go through KYC accreditation if need to in the primary. They can review the offering, they can review the documents. They have custody accounts that are automatically set up, which allows for the transaction to take place online. It's all captured there in one platform. On the secondary market, the transfer agent is integrated, takes a transfer agent to transfer these titles. The matches are made by the ATS. All of this background, you don't need to understand what I just said. All of this infrastructure background, Web3 is all integrated and put together, but for the buyer and the seller of the security, it's a few clicks of a button. Or if you're setting an account for the first time, you're going to go through some of those verification processes, but that's all in one spot, which is awesome. Ongoing investor management through automation. It's done through the platform. And then SEC registered ATSs require compliance and due diligence. So the platform, for example, would require investors to go through KYC, as mentioned. If it's secondary, they're not going to have to go through that accreditation, but there could be other things there depending on how the deal is set up. And then, of course, to come onto our platform, for example, as mentioned earlier, you're going to need all those compliant documents, and you got to stay compliant if you're going to trade on the ATS. So that's something that our broker dealer actually gets involved with. Tokenization strategies and the secondary marketplace. So normally what we see when we see people tokenizing their real estate investment projects is we may see a single property where maybe it's a really large apartment building, maybe it's a development project, industrial, you name it, right? Storage facilities. They're just a really large single property, and they're going to turn the ownership into fractional tokens there. Another thing we see is, and we particularly see this on smaller assets that want to be able to trade as a brand. They want to add brand strength, or they want to be able to attract bigger investors. Because if you have, say, a $2 million project and a $7 million project and a $3 million project, you may want to bring those together under the same brand as a portfolio and tokenize that entity that has that portfolio underneath it. And now you basically have a brand that can trade, and you've got some mutual benefit going on for the properties. And then the third one we see is, of course, a fund. A common one is a blind pool fund, which means that funds are raised prior to the identification of the property. So we normally see this with like experienced syndicators, those that are acquiring property very, very regularly. They will create a fund, so they have those funds ready to go when the opportunity comes. So that's kind of what we see the three major buckets. So let's really draw a distinguishment here between the primary and secondary marketplace, so we can just get a good understanding of this. So remember, the primary marketplace is where somebody's going to raise capital for the first time. They're going to create a security, and they're going to sell those securities or sell that equity for the first time. We call that a primary marketplace, and it's an initial offering. And we talked about some of these exemptions already to be able to do this in a compliant manner. Reg D, Reg A. Reg D has a 506C and a 506B. I'm not going to deep dive this, definitely not a legal class here. But Reg A is interesting. It takes longer, much more expensive, but it can actually go to the secondary market right away. So I'll just make that footnote on the Reg A. And then Reg CF is reg crowdfunding. It's an exemption, and for the right projects, some small projects, it can be a great way to go. Definitely comes with its share of limitations as well, though. But those are the three primary ones. Integrated investor qualification. We talked about that earlier. You want to make sure that your deals are compliant, right? That is just such a important thing. There's been news stories lately of platforms, even real estate tokenization projects or platforms or companies really that weren't compliant, right? They're really trying to operate in almost an unregulated space. They're trying to mix in a lot of DeFi, which we like the opportunities, and DeFi will play its part. But remember the position that we take, and that's that these are securities. And so if you're doing, say, a Reg D 506C, which is accredited investors only in the primary, that's different in the secondary. We'll get to that. But in the primary, they need to be accredited. So that qualification process is all built in up front. You can set minimums. That's pretty common in the primary marketplace, not quite as common in the secondary marketplace. But with all of the features that digital ownership allows, we've seen these minimums be, 50 to 100, couple hundred grand minimums dropped much, much lower to today, $1,000 minimum to get involved, because the way the digital ownership component is able to function, the way the platforms are able to function, it just really streamlines and automates a lot of that work that used to be a pretty manual process. Similar to traditional syndication, but with modern efficiency. All right, secondary marketplace. So the secondary marketplace, everybody's still going to need to go through KYC. Typically, these are global marketplaces, and if somebody doesn't make it through KYC, though, they're not going to be able to participate. So I'm guessing that somebody from Iran is probably not going to be able to participate. I know that Russian oligarchs cannot participate. So there is a KYC verification. You need to know who is owning a piece of this, even though they, in most cases, unless you structure it differently, don't have a say. They don't, you're not necessarily going to have to interact with them. You still want this filter process, so not just anybody can get in there, and you don't know who the owner is at all. Streamlined online investment process. We talked about that earlier, where that's all connected and they can just invest right there. What's cool about this is I know our broker dealer, REtokens Capital, has the ability for people to use crypto to invest in these real estate tokens. Now, as it sits right now, the sellers are not. They could. The technology's all there, but it doesn't mean you have to accept the crypto. If somebody used Bitcoin or USDC or something and they wanted to off ramp out of the crypto world and get into the real world assets, which is what real estate tokens are, the platform allows to do that because they have these multi asset wallets, which is another word for custody accounts. That's how you can just think of it. It's almost like you have your own bank account, if you will, with a custodian, and it's called a custody account. Anyway, all that stuff is integrated to make the transactions seamless on the back end. Real-time ownership tracking. So this is done in a cap table. The SEC still recognizes the transfer agent as the source of truth, but it is tracked on the blockchain as well. And with the new regulatory environment, the new regime in there, we think that sooner than later that the blockchain will be the source of truth. But you do have the transfer agent running a cap table there. The transfer agent, as I mentioned, was integrated with what we do, and the blockchain is as well. All right, GPs and LPs may trade tokens with retail and institutional investors in the secondary marketplace. So Once the project, the real estate project is approved and listed, because remember the compliance verification part, the due diligence part to make sure it's compliant when it's listed. Those folks will be able to sell under 144, assuming all those compliances there and the buyer went through KYC. There's a few boxes to check there, but they'll be able to sell to those retail investors, and of course institutional investors will be able to invest and have access as well. So for example, one of the groups that has contacted REtokens is a group of fund managers. So these are fund managers that invest in real estate, and you could call them fund of funds, if you will. But point is they raise capital from people that want to be in real estate. The fund manager is the real estate expert, and they find real estate deals, real estate syndications to invest in as a limited partner. And when they put these funds together, they're normally able to get favorable, positions into these deals, or buy a larger share into these deals as they larger than they would be able to do as individuals. And that's pretty cool. And so they're really looking forward to have access to, a kind of a plethora of deals here as the market matures. So full settlement integrations involved. That's very cool. That's really one of the biggest fundamental things going on here. Normally for real estate to settle, for ownership to change hands, it can take months and months. It's extremely expensive. There's a lot of people, in the middle, while you see the stock market or the crypto market, trade virtually same day, or I guess T+1, if we're going to get into some of the stock stuff. But full settlement integrations for real estate and fractional pieces of real estate is very, very cool. So if you have a seller, you have a buyer, they're going to transact, you could get that to settle in a very, very short window, probably seconds. And then in the future, or I should just say conversations that we're having, market makers will be a part of that ecosystem as well, and that will add additional support for the liquidity equation there. All right, real estate exclusive secondary marketplace. How it works, they can view online marketplace 24/7, 365 on your projects. Online's offering an investment for qualified investors, potential global investor discovery and participation. Digital ownership shares are transfer and can be verified on the blockchain. Benefits: potential investors from around the world may now have access to invest in your deals. So one of the big, huge benefits as a syndicator that I see as a real estate person is the ability to scale your real estate investment business at a whole new level. There's so much like competition in the space, and you're really trying to set yourself apart. And then again, you're limited to the exposure you can get for your deal. But imagine an online global marketplace where folks can go and you can gain that exposure. Like, so when we're all about brand building, so ultimately you have, 123 cash flow real estate as your brand, maybe your asset manager. We want you to promote that brand, right? And so you may have several different tokens under it, meaning 123 Main Street, 456 Post Street, 789 Sesame Street, whatever these tokens are, but they recognize your brand, right? They recognize your brand, and that will just gain momentum as it goes. That will probably also add velocity to your deal, your transaction. That has the potential to, comes with all sorts of benefits. You can just do the math on if you're seeing a lot of velocity in your particular token. And then when you do primary offerings, if they recognize that brand from secondary trading, think about that, right? They know that that's the future of the offering you're making to them. What do they think about that? How do they feel about that? Does that give you a competitive advantage, right? Those are questions I'll let you answer for yourself. Repeated marketplace exposure builds recognition. We just talked about that. And then SEC registered ATS marketplace. That's a requirement, by the way, under 144 to be able to sell to a non-accredited investor. You have to do it with an SEC registered ATS or marketplace. So that's really important to keep in mind. Enhanced security features. So the blockchain has immutable records. Blockchain records on the appropriate blockchains, like what we use, cannot be altered. They're immutable. They're not going to be changed, and so that's a huge benefit for transparency. Automated compliance. We talked about programmable ownership and programmable compliance. It's a very, very cool feature. SEC registered, digital broker dealer, and ATS. And we like to think about this as where traditional finance, traditional real estate, if you will, offerings meets the digital era. And then transparent documentation, right? So when you have things on the blockchain, that really opens up transparency and has the potential to build trust with investors based on the fact that if they are able to access and see more information on your deal, maybe any insurance claims that you do or don't have, financials, all those types of things, versus somebody that's just got it on a spreadsheet or their computer. Which deal do you think that the investor is more likely to participate in? Okay, let's talk about, who do you need on your team to make this happen? We'll overgeneralize this a little bit. But first is the issuer. And in a lot of cases for this webinar, that's you. You are the issuer or the syndicator or the sponsor or the general partner. They often all mean the same thing, not always, but often. And one question I get a lot is, well, what about the control? Or is everybody voting, whether to put a new roof on or not? You could structure it that way, but that is not what we typically see out there. Typically, what we see is maintaining full control of properties and operations for the syndicator or the sponsor. And that allows you to focus on finding and managing great real estate investments. Remember, that's what this is fundamentally about, is great real estate investments that are operated well. That's what makes everybody win, right? Access to new capital sources and investor management simplification. We talked a lot about that. And you can benefit from institutional grade platform capabilities, right? Normally, there's not a whole lot of access for the average issuer or sponsor to these institutional players. And that's because institutional players require certain standardization, certain packaging. They need to know that this is really actually compliant, and platforms that are registered with the SEC, for example, are what they're going to want to use. They're not going to want to typically use something that is not. They need all these compliant and safety measures in place. And so that's what's really cool about the future of capital markets here, is now those guys will all play on the same playing field, which is awesome. Securities attorney, talked a lot about this. Your securities attorney is going to be critical. They're going to handle all the legal documentation and compliance. We work with our issuers, securities attorneys, or they work with ones we have relationships with. They're going to create that PPM, that op agreement, offering memorandum, subscription, all the things that you need to really do this and make it happen. They manage SEC filings and regulatory requirements like a Form D. So even though you don't have full SEC registration with a Reg D, because you found the Reg D exemption, you do have to file something called a Form D with the SEC and kind of say, hey, just to let you know, I'm raising capital and I'm using this exemption. And so the attorney's going to ensure your legal compliance. The platform partner, very important, right? Manages token creation. So they're going to mint the tokens, the technical implementation of this. Certain platforms have integrations for investor verification and compliance. In fact, if it doesn't have that, I would be pretty concerned. very, very few have the ability to provide secondary market access and trading capabilities. And for us, as mentioned, REtokens USA is not a broker dealer, but we have an affiliated FINRA member broker dealer, ATS. And that is who runs and operates a secondary marketplace, kind of like what we talked about before. And then finally, on the tokenization team, you got the end of the equation, the investors. And now they can access deals through a professional registered marketplace. They benefit from enhanced transparency and flexibility once they own those real estate tokens. They gain potential liquidity through secondary trading, which we talked extensively about. And they receive the same returns and benefits as traditional real estate investments. So, but instead of just holding a subscription agreement or maybe a place on a spreadsheet, they actually have a custody account, or they could be self custody, and they can now take control of their investment. And that really creates a much more robust environment for all parties involved. If things are locked up, they don't move around, they don't have velocity, then they trade like real estate today trades at something called an illiquidity discount. That means that the price of the asset is discounted due to the illiquidity of it, right? And so that's something to think about. All right. So just to kind of recap things, right? We've covered quite a bit, and some major benefits for you is just the online capital raising potential is much more effective and streamlined. You reduce the administrative burden to raise money and can raise money more efficiently. Innovative leadership in your asset class. We talked a lot about that. Very, very powerful right now. When you're out there looking for an edge, it can be the one that sets you apart. And then being able to scale your brand enormously, potentially globally, and be innovative and ahead of your competition. That is a real game changer. So we're wrapping up here. We'll get to the Q&A shortly, but just so you guys know, if you want to learn more about real estate tokenization and some of the things that we have going on, here are some options to be able to do that. And you can find these at retokens.com. It's retokens.com. We also have a great YouTube channel, and definitely I would make sure to follow our LinkedIn page as well, where we share a lot of thought leadership, current events, and things like that, where a lot of you probably found this webinar. So